In this video, I want to talk about something that many consider flawless execution, meaning a lot of people read the charts, they say they have to buy the lows down here and sell the highs for them to make the most amount of money. And in this video, I want to say why I believe it's different and how we can still trade flawlessly by following our plan and building our account consistently by following the same process. It's a big psychological barrier that we have to get over, and I'm confident in this video it's going to give you the points needed to get over this obstacle and make a light bulb go off in your head so you could trade differently and trade more efficiently. Before we get into it, I recommend everybody to follow me on my Instagram at Ameritrade. This is my only account. The link to follow it will also be in the description below. I post daily trading recaps along with really good trading tips and tricks that I guarantee you're not going to find anywhere else. The link is in the description below. You're seriously missing out if you're not following it. But now let's get right into this re-upload. A common misconception with trading is a lot of traders think they need to execute flawlessly in order to make money. They think that they need to buy at the lowest point and sell at the highest price. You know, looking at this chart, they see a big move and they think, oh, I'm gonna buy at the low and I wanna sell at the high. That's the only way I'm going to make money, and I want to make the most out of it. I can guarantee you, you do not need to catch a full move to make money, and the best traders that I personally know on Wall Street do not aim to get the full move. All they want is to follow their plan and get a portion of the move where they execute flawlessly by following their plan. 99% of the time, you're never going to sell at the bottom and sell at the top. I never buy at, let's just say, $1 and sell at the high at $5. I might buy at $1.20 and sell at, $3. I'm not going trying to squeeze every penny out of the market. I'm following my plan and I'm trying to execute flawlessly. How I define executing flawlessly is I perceive my opportunity and I act upon it without thinking. How I say flawless execution and what we're going to talk about in this video is just trading the chart and following the plan. Everything else, which I consider terrible execution or just not the proper way to execute, means you are trading based off of your emotions and you are not trading based off of the chart, off of your plan, off of your style, and off of your edge. The best trades come when we do not think, only when we act upon what the market's giving us. For example, I want to go over the pre-market plan in the Discord. This was a setup from last week. We are watching the S&P 500. From a technical standpoint, we had demand lower at 4231 and demand at 4258 that we are watching for a strong break down into it and possibly to bounce if we had buying confirmation to play the market long. We also have resistance above and supply above. So let's just say we were looking to take this market long. The price is selling off. A lot of traders are fearing that the market is going to keep selling off, not realizing we're in this demand zone, and we get proper confirmation. Let's just say we take the market long right here around 42.70. At this point, I'm going to pull up the SPY options here, and these are the SPY 430 calls. These had a low of about $2, $1.90. And let's just say by the time we entered, these were at $2.50. Our target for this trade was going to be around this area right here prior to this move down that formed somewhat of supply. So as the market's rallying up, we hit our plan, we exit at supply, and these contracts went up. If I pull this up over here, by the time we hit supply from $2.50 to a high of $4.30, that's a 75% return in 30 minutes. Whereas if we're investing $250, we're making a $200 profit out of it. Or if we invest $2,500, we're making a $2,000 profit out of it. You don't need a lot of money to make good money in this. Now looking at this chart, I followed my plan. My entry was down here at demand and my take profit was up here at supply. I exit full position right here, followed my plan perfectly. I executed this trade flawlessly. There was nothing I did or nothing I could have done better. I entered where I needed to and I exited where I needed to, right? What happens? The market keeps rallying up, and from our pre-market plan where we wanted to break above this 4322 resistance, we get that move inside of supply. And where we entered at, let's just say $2.50, these by end of day went to a high of $7, which is now 180% return. Our $2,500 investment now could have made us $7,000. So that's a crazy jump, right? But you never need to sell near the high or buy near the low to make money. You have to follow your plan, and all it takes is getting a good portion of that move and executing flawlessly. And that's all you have to do as a trader. Now, here's another example on Tesla. This had a nice rally into the supply zone where we made lower highs. We also made higher lows. As we broke out of this triangle or this wedge, this could have gave us valid confirmation, some nice selling pressure that came into the market. As we broke out, volume started increasing. And let's just say we played puts at the break of this wedge, and we had a target of, here we played puts, and let's just say we had a target of this area right here where we could consider it demand after that high volume and that push down. So yeah, we got about 7 to 8 points on Tesla. Great trade. We executed where we needed to, and we took profits down here at demand. Yeah, the market sold off another 8 points, 10 points, but we followed our plan. We can't look at how much we could have made or should have made, because then greed kicks in, and then fear on the next couple of trades is going to start kicking in, and subconsciously it's going to make us trade different. Fear and greed are the main components. Detach yourself to the money and attach yourself to the process, because the process is going to bring you those results. So I want you all to start thinking about the market like this. Understand and accept that there are no guaranteed outcomes. No one knows what the market's going to do next. Not myself, not Warren Buffett, not the best traders on Wall Street. No one has a clue what the market's going to do next. And the problem with this is a lot of retail traders, the ones that are in it specifically to make a lot of money fast, is they want a guaranteed outcome. They want to roll out of bed and they want to make more than they are at their normal job. Or they have a goal to make, $500 or $1,000 today. They want that guaranteed outcome. They want that complacency, and they want to feel comforted by the market that it's going to produce an outcome that they want. There is no guaranteed outcome. And when you guys realize that there isn't a possibility of this, you hesitate. A lot of traders think too much and they fail to put a trade on and act in their own best interest. It's an all emotional game. Here's another example on the S&P 500. This was from the pre-market plan as well a couple weeks ago. We are watching sellers to start stepping in at this 4234 supply zone. Nice morning rally, nice rising wedge. As soon as we broke out of it, we had a clean sell-off all the way down into this demand zone, making lower lows and making lower highs. Now, if we're a trader that has very bad execution, I'm going to get into how to correct that by the end of this video. But let's just say we're a struggling trader, we're failing to execute. That boils down to, emotions. We're scared. We don't want to lose on this trade. We don't know what the outcome is. We don't know if it's going to win. We don't know if it's going to lose. I can guarantee you myself, taking setups like this or any other trading scenario that I take, I don't know what's going to happen. But the only thing that I do know is I have to put risk on the table in order for me to make money. A lot of traders will hesitate taking this setup, perfect sell-off, just because they're fearful and they're failing to act on their own best interest in the market when the best opportunities and the best setups, are right in front of their face. We must accept risk in order to trade successfully. As traders, we are protective risk takers. We are not gamblers. If you are a gambler, listen closely, you're gambling when you do not have a defined system, when you do not know what your edge is, and you feel like you're guessing if the market's going to come up and down. That is not the right way to trade. When you have a system and when you have an edge, for me, it's all based off of, and the core is my supply and demand. When I have something like that, then I look at myself as a protective risk taker. I don't know the outcome, it's not guaranteed, but I know that I have to have risk on the table in order for me to make money. You have to be comfortable taking risks, because the greatest risk is having no risk. I saw that quote once and it really resonated and stuck with me. The greatest risk is having no risk. You have to be comfortable having risks, because you're never going to make money if risks are not on the table. Now, I saw a quote from The Disciplined Trader by Mark Douglas, and I want to highlight this over here. I found this PDF online. And he basically says, with trading, the future is not random. Price movements, opportunities, outcomes, they're all created by traders acting on their own beliefs and expectations of the future. We buy a stock, we buy an option because we want it to increase in value at some point in the future. We make up the market. So the outcomes and the price movements are not random, because other traders have expectations of the future. We contribute to the outcome by taking trades in accordance to our beliefs. We are the ones that create the future, big money, retail money, however you want to look at it. And because of that, our outcome is not random. This adds an element of responsibility to trading that doesn't exist with a pure random event, and it is difficult to avoid. This higher degree of responsibility means more of your self-esteem is at stake. A lot of traders fail to accept that they are wrong, and they want to be right all the time. That is a big failing trait of a struggling trader. You make it a lot more difficult to participate in the market, and you make it harder on yourself. It gives you ways to beat yourself up of the things that you could have done or should have done, resulting in a more satisfying outcome. And that usually boils down to making more money, and we can't be attached to the money. So, this beating yourself up for what you could have done better or what you shouldn't have done contributes to terrible execution in the future, and it's going to prevent you from trading flawlessly. No matter what the outcome, you're always going to try to figure out, different ways of making the trade even better, even if the trade was great. Going back to that example earlier, when we took calls off of this demand zone, I looked at this trade as a perfect setup, 10 out of 10, right? But other traders see where the market rallied another 40, 50 points, see they could have made an extra 5,000 on this trade, and they think they did something wrong. They beat themselves up. Oh, I could have made an extra 5 grand. That's the wrong thinking in the market. For example, this trader took an excellent trade. He got long at this sell-off into demand right here at this circle. His stop loss was below this X, and his take profit was this line up here. Great entry, great stop loss, and great target. So he got long down here where my cursor's at, stop loss below the line, and he took profits up here when we hit this line over here. He sold 60% of his position up here at the highs and stopped out at this X over here when the market started moving lower. And he wanted to know what he should have done differently. Did he move his stop loss up too high, too soon? And what I said was, it was a great trade. It depends on how you look at it. He executed well, he followed his plan, and he had a valid reason for entering, and he exited exactly according to his plan. He planned to exit right up here. Just because the market kept moving higher and he saw, he could have got an extra 40-point rally to the upside, doesn't make it right to figure out or to think you did something wrong. It doesn't mean that you did something wrong or you should have done anything differently. You followed your plan and you executed it flawlessly. Didn't mean to put him on blast, but he took a great trade. And a lot of traders, this will affect them because they always try to squeeze every last penny out of the market. So you could have a great trade, but a great trade is defined if you followed your plan, not if it worked out or if you could have got more profits out of it. Now, you should beat yourself up if you're not disciplined or if you lack patience. This is something a lot of traders struggle with. They are too antsy with the market. They're over trading. They're lacking patience. They can't sit on their hands. That's something you have to be aware of because that's going to force you or make you enter too late. You're going to chase the market. You're not going to obey your stop loss. You're not going to follow your plan. And you might be trading with too much size. That's something you should be upset about. That's something you should beat yourself up with because that's how you're going to get better. Becoming aware of it, learning from it, and doing everything not to feel that way again. That's how I learned. And you have to accept you're not going to be a perfect trader. I'm not perfect. You don't have to be perfect to make money. And you don't have to be perfect to be successful and profitable. I like to use the analogy of, Tom Brady or any, great quarterback. They throw interceptions. They get sacked. They fumble the ball. They don't win important games sometimes. But at the end of the day, they're not perfect. And yet they're still great. They're still successful. And they're still, performing at the best that they can be. It's essentially like fighting yourself in a fight you can't win with trading. You shouldn't beat yourself up for a technical decision, such as selling a position that you followed your plan and looking at how much you could have made if you held, a couple minutes longer. But you could beat yourself up if it was based off of a emotional decision. And the best way to get good at flawless execution is to become educated in what needs to be done and then practice. You got to practice. Screen time and experience is everything. I can't stress how important screen time and experience is. you develop a lot of things with it. How I recommend doing this: trade with small size. I don't care if you have 100,000 in your account. I don't care if you trade with $1,000,000. You should only be trading with 1 to 3 contracts, regardless of your account size. Many people think it's easy, or they think they know what they're doing. They blow up their large account without having an edge, and they trade based off of emotions. When you first start out, trade with small size. You learn via trial and error. You get educated in the proper mechanics of the market. You develop your system, and you learn from your wins and losses without hurting your account. You have to lose in order to win. If you guys want me to make a video about this post, I'll be more than happy to. Just comment down below and I'll get fully in depth with that. You have to practice, and you have to practice with enough money that you could afford to lose, because you win by losing in this game, in my opinion. You must learn to follow your plan, trade the chart, and executing when your signals trigger without hesitation. It's an exercise. There's no reason to do it if you have a $100,000 account with all $100,000. Do it with small size that you could afford to learn from your mistakes. That is the only result you want to be looking for. It doesn't matter if the trade was good or bad. The more accepting you are of your mistakes, the easier it's going to be for you to make the next attempt successful. And the more you get upset with yourself for your past mistakes, the more you're going to relive those mistakes, and they're going to show up in your trading results. It's like a domino effect. You do something wrong today, that's always going to have an impression in the back of your head, and it's going to affect you subconsciously for your next following trades. So let go of your mind, think less, follow your plan, accept the unknown in the market, and that's really all we could do as a trader. And that's how I'm going to end the video. I know it's a re-upload from over a year ago, but the concepts still apply. And it really, once I rewatched the video today, it really struck a point with me, because it's something that I'm struggling with in the current market conditions, about trying to catch a bigger move, not really following my plan, and giving up some profits just because of a psychological barrier that we can easily overcome once we switch our mind and let go of our thoughts. So I hope you all enjoyed. Comment if you have any questions. I would appreciate a thumbs up on this video, and definitely check out the links in the description below. Peace out. Enjoy the Super Bowl.